Hello folks, this is Brandon Chapman with you today. It's another video. I normally do Mondays, but Don, it was the holiday and Don had something going on, so I'm subbing for Don today and taking the video. Boy, if we're to try to describe the current market conditions, how would you describe it? I mean, eye of the storm, it's a middling effort, indecision. I mean, if we break this out to a longer time frame, market just closed here, you'll notice we've really done nothing over the last month, right? So we've basically gone sideways. We've had ups and we've had downs. We've had ups and we've had downs. Essentially, any gains you get from Jackson Hole are wiped out within a week. Inevitably, we're just not getting any movement. And to be honest, this is frankly unsatisfying for the masses. But what we do see today, when we cut through and we look at the options market and seeing the big trades that are being made, you're seeing rolls. And we're going to talk about that. So today can be characterized as roll them if you got them. So if you look at the S&P 500, we're basically finishing higher. We had a rally here the last, last half hour into the close. So we basically closed just almost a little bit higher than where we opened. If we back this out to a daily chart, we erase some of the intraday weakness. We finish near the high of the session, but inevitably, today is an indecision day. The smallish body, the open and close being virtually the same, we're seeing there's just very, very little direction as a result of this. Now, you might look at the longer lower shadow and say, yes, there's a slight upward bias, but after following up from yesterday's massive reversal off of our lows, again, this is a middling effort. And again, what we're looking at the market generally, where do we move from here? You look at communications, which is what? Google. I mean, for goodness sakes, Google, it was up 9% today. Now, as we look at Google, well, how much has this thing got left in the tank? Now, there are three different signals you could take after a gap like this. The first, you go to a 5-minute chart. And essentially, you look at the first 30 minutes. You go 5, 10, 15, 20, 25, 30. You take the high in that period. If we can close on a 5-minute bar above that high, which we did right here at 9:05 or 11:05 Eastern time, that would be an entry to buy the gap in Google. If you finish near the high of the day, which clearly we did today, we finished the high, that would be a potential buy signal. Now, the third would be if we did not qualify for either of those two, you're looking at today's low at around 224.50 as being a level of support. You look for the stock to maybe pull back to this level, basically looking for the next bounce. But here's the thing though, these gaps frequently happen and it is the last gasp of the market for that stock. And so what I like to do, I like to draw fibs both as projections and retracements. So as we go back in the past on this stock, you can see this trend began where? With the low on April 7th. The first swing was from this low here to the next high there. This creates the seed wave, or the main initial wave that propagated this trend. This pullback gave back close to about 2/3 of that rally, but we're still in there. So when you draw a projection, you just bring up the Fibonacci tool, click on the end of the short-term trend, go back to the beginning, and what happens is you create a projection based upon the initial seed strength right here. You can count waves if you want. I don't really go there. But what I'm looking at is the idea is that, hey, there's enough strength in this trend to carry us if it's a correction to 161, if it's a new trend to 261, if it's an extended trend up here at 423. And that's exactly where we hit today. In Google, we blew through the 261 here. You're looking at a full retracement going all the way back to 423. And that's exactly what we achieved today. So when you get gaps like this at the end of the trend, it generally points to what? Exhaustion. So if you've got a bullish trade in Google and you move 9%, you might want to take profits because the next few days, maybe we can eke something out. But the tendency is in the coming weeks, probably reversing and filling the gap and seeing a trend reversal. Now, nothing's 100% certain, but we take the length of this trend and how late in the stage of this trend this is occurring, it certainly looks like this might readily be an exhaustion gap. Well, if we take away the 9% in Google, what does that mean for communications? What does that mean for the S&P generally? This is a massive move. If we look at the periphery of MAG 7, right? MAGS. Again, MAGS is up 2.5%, 2.4%. Well, how did Meta do today? This is another communication stock. It was up 0.26. How did Apple do today? This is a technology stock. It's up nearly 3.8%. Where's Amazon in the mix? Nada. What about Microsoft? Where did Microsoft finish? Nada. Let's look at Nvidia. Where did Nvidia finish? NVDA. And Nvidia actually finished flat to slightly down. The reality, today's move is purely about Google and maybe secondarily Apple. Not exactly the breadth in the mark you hope if we're just about to resume or begin the next leg of this bullish trend. In fact, you look at companies like Nvidia and you realize all of the volumes have been occurring on the down days here. Volume here on these 2 down days, right? Right there and right there. Volume on these 4 down days. Now 5, we're going to end up about average volume, but this is a indecision day. Yesterday was an indecision day. And for Nvidia, if we start to break through support here, we kind of close. If we use that low, we start to finish below, let's say, yesterday's low, we could see a much deeper retracement. This trend on Nvidia has carried us from 86 to 183. The bigger they are, the harder they fall, right? $4 trillion stock. We could readily see this if we break through here, carry us to 146, 135, 123. And this trend is still intact, right? In the longer term. There's basically a vacuum under the market that wants to get filled that as yet has not. We're still seeing, again, the vacuum. I'm going to bring up SPY. I track like large single prints that are over 1 million shares. We broke through and we're now currently testing as the high today that print from back on 8/15 at 644.51. We start to break below 643.14. There's a vacuum. Where do we start to pick back up again? 628. You break 628, we go back to 620. Let's measure the retracement here. So I'm gonna remove that drawing, and I'm gonna remove the red ones anyway. And what we'll do is we'll look at the retracement here. Where are we going? So if we start to see a breakdown, where is the 1/3 retracement? It's 585. Well, that's about 50 points from the current level. 50 points, again, we're looking at a 5 to 10% correction. And this is something we've been watching for, waiting for, just hasn't happened yet, since back here on the 23rd. Right? Well, look, it has not been smooth sailing in the S&P since the 23rd, back right there. We've seen a bit more volatility come in, a bit more two-way action. The problem is no follow-through. We kind of gap and fade here, not really down a lot. We get a gap here and we reverse big the next day. Right? We consolidate for a big down day there. We go trade down. We come off the lows for the session down, then really move up on the Jackson Hole speech. Now we get here. We see a big down day yesterday. We rally off the lows. We're up today. There has been zero follow-through, both from the downside. Unless you picked it up here, you might have been able to find some areas to close in this rally. If you're getting in here, you get 2 up days and then we go down again. Big up day and we go back down again. This is a very unsatisfying market right now that eventually should resolve itself where it needs to. It's got to resolve itself to the downside, right? With skew elevated right now at 151, it just tells you that yes, the most frequent occurrence is going to be small up days. The bigger move is to the downside. The crash risk is to the downside. So why not get it done now? Why not get the selling over with, get the most bearish period of the year done with, and let's move on? So far, the dollar's weakness is masked that. In fact, you look at GLD and you see the massive move in the last 3 days. You recognize the weakness that we're seeing in the dollar. But even gold is not impervious to the concept of what's going on right now, and we're talking about rolling. Now, what does rolling an option mean? You close your existing position and you open up a new position, all in the exact same trade. Well, let's take a look at what happened today in gold. Because at the end of the day, is it bullish? Yes. But it's also an indication of the profit taking that we're experiencing in gold right now. And so if you notice right here, this is SEP 320. It's about 90,000 contracts here for the 19 SEP calls. All right, now this is 330 calls. Now this is the 320. We're missing some data that was here earlier today on the 330, but never fear, okay? We're going to look here for GLD, and we're going to see the print here in Ghost Prints, and you're going to see right there 141,000 contracts traded in one print. It's about 139,000 contracts, 134,000 were traded of the 330 calls and were filled at the ask or above. Now, that happened at the same time the 320s took place. And again, we're missing the data on the 330 calls. We still have the 320 calls at about 80,000 contracts. So what happened here? They closed the 19 SEP 320s and they roll it out. They roll it out in time and up in strike price to what? Well, actually, this would be up in strike price to the 19 SEP expiration 330s. So as we scroll down here, what you'll see is the 320s, 86,000. They rolled them out here to the 330 strike price. Okay? Closing that and doing that. Well, what are they doing here? They're selling that for 10 and buying this one for less than 5. They're taking the risk out of the trade while leaving a runner at 330. And so we've seen buying 320s and 330 and selling the 330 call spreads. In this case, they're holding the 330s. If we can break through 330, we might get a little more of an upside squeeze. But what we're seeing today is a very significant profit-taking play, because we're selling the 320s and buying the 330s, and the 330s cost less than the 320s. That is what we call a roll. Doesn't mean we can't go up. We break through 330, we might see the market get goosed for gold even further. But what we're seeing in gold today is profit taking. What about silver? Another precious metal, another one that's moved significantly in the last few days as the dollar has gone down significantly in real terms, not relative terms. Relative terms are against the euro, for example, DXY. This is relative, right? Because that's predominantly taking the euro against the dollar. So dollar weakness yesterday, strength yesterday, dollar weakness today against the euro predominantly. Well, if we go back to silver, silver's benefited by the general weakness in the dollar. But again, what do we see today in silver? Well, guess what? Let's bring it up here on the console. Now realize the console is not looking for closed trades. We're looking for open trades. You'll see right here, 32,000 contracts bought at the ask of the September 30, 38 call. Well, again, is that part of a roll? Well, let's go back here and let's take a look. So we're going to go down here to the bottom. We're going to quickly look at time and sales and see what other trades were made. Well, guess what? They sold the 19 SEP 35s and bought the 30 SEP 38s. They sold it for $267. They bought this new option at $94. They booked almost what? Almost $1.60 in profits in this silver call right here by rolling it. This occurred at the exact same time. So while yes, we still have a lingering bullish trade, overall it's bullish, but it's also representative of taking profits. And that's your 38 right here, right? They're buying the 38s. We saw that in the console, they're buying it. They're rolling it from the September expiration to the 30 SEP expiration to the 38 strike. Selling the 35s deep in the money and buying the 38s. So what is that doing? It's taking profits, right? We're not out, we're leaving a runner in here. And again, if we can get to and through 38, it may help propel the stock. But as of the time being, what we're seeing is, again, we're taking profits. Let's take a look at ETH today. So again, we're looking at Ethereum ETF here, right? ETHA. And again, let's go back to the console here. What is this giving us, right? ETH. This is giving us one print that meets the background criteria and the foreground criteria as well. But 4,600 contracts, mostly traded in one trade in ETH. 4,600 contracts traded in one trade. At the ask, they bought the 42 calls today. What are we doing in the background? So something I like to check to see is the roll. Does it fundamentally change anything? No. But what you'll see here is they sold the OX 36 and the SEP 38s. and they're consolidating around the 17.42 calls, buying 4,600 at the ask. And that's exactly what we're seeing here. They bought the 42 calls at the ask, 4,600 contracts. So what does this tell us here? Let's go back to the chart. Is it bullish? Yes, it's bullish. For Ether, they bought the 42 calls. Could we get up here? Absolutely we could. Okay, gives us a target here. Time frame, we're looking at 17 October. Could we get above 42 by October 17th? Absolutely we could. But they also moved it. They moved the strikes from the 38 in the same expiration. We moved 38 up to 42. They took profits. Now, in this case, it's a little different because if they close out the 19 SEP 38s, the 17 OCT 36, they're collecting a decent amount. They still paid $1.10 to take the 4,600 contracts there at 42. Okay? So again, they kept about a third of the total cost on the table in the 42, but it's still profit taking. At the end of the day, that is the main takeaway of today. You're seeing profit taking in existing trades on bullish trades for stuff that actually moved, right? Gold and silver predominantly. But also, what do we see? There's also been rolls in two other products here that are very indicative of what's going on. This to the opposite. So instead of taking profits in EM, what they did today, and I'll show you here in the console, we'll bring up EEM. You'll see right here, they bought the 50s and they sold the 48s. Still got filled a little high there, but again, that's not a spread trade. Sorry. They bought the 50 puts, 6,000 contracts for November 21st. They bought the 48 puts for October 17th, 6,000 contracts. So let's see what else is going on behind the background there. If we're talking about was it a roll? So we come down here, you'll see what were they? 48 calls, right? We talked about EM, the 17 OCT 48. So let me just orient our search here specifically at that. And you'll notice right here, the 52 calls being bought, 34 cents near the ask, right? 52, 52, 50, all this at the ask. A little bit here occurring at the bid, but still might be buy orders, right? Just because they're getting filled here. So point being is they're buying the what? Buying the 52 calls in EEM. Now, what are they rolling from? Let me show you what's happening here. I'm on the wrong side, sorry. Those were closes. We're talking the put side. I was like, this looked weird. All right, right here. So 17 OCT, 48 puts, 6,000 contracts. The problem with those were not opening trades, they were closing. This is an opening trade, as we saw in the console. 6,000 contracts, paid 32 cents, that's near the ask. And you'll see right here the 44 puts. Traded at the exact same time as a spread. What are they doing? They're closing the 44s and buying the 48s. The 44s are way the heck down here on EM, right? They're rolling it up to 48. Now the difference here, it's not profit taking, because guess what? They sold the 44 for 8 cents. They're buying the 48 for 32 cents. They're coming out of pocket to do that. Let's take a look at EWZ. So again, scroll down here to the time and sales. What you'll see is the 27 puts. Make sure that's right. Go to the console here. Make it easy for us, EWZ. You'll see the December 5th, 2850, 5,000 contracts. So right here, make sure, September 5th, 2850. So we gotta change this to September 5th. Change that, and now what you'll see right here, they sold the 2850 puts, bought the 28 puts. No, sorry, that occurred at 9 cents right there too. So what do? We closed it was in the 28s. You gotta look at the right time here. Yeah, 24. Got it written down on the side over here. 48 and 44 puts. 28.50 and 28. Yeah. So in essence, what's happening here? So we look up here at the open interest, and you'll see they're closing out the 28s and they're buying the 28.50s. Right? So they're closing out the 28s. That right here is closing out the 28s. And again, 9 cents, they're still buying that at the ask of 9 cents. Again, they're rolling it up. They're doing it for an increased cost. That says, oh, 3 cents. Yeah, I get it. Yeah, but that's at the ask down there. But there's a 1 penny spread. There's a wider spread here. 9 cents getting filled closer to 10. Point being is that what's happening? We're taking the 28s and we're moving it up to 28.50, and we're doing it not for a credit, but for a cost. So today, what we're seeing is the repositioning. We're rolling for profits on bullish trades, and we're rolling up our unprofitable put trades to a higher strike price in 2 key instruments in EM and EWZ. EWZ likes energy. EWZ likes commodities. That is Brazil, right? Well, you look at XLE today, oil stocks really got hit down 2.25%. I'm looking at this thing getting to about 84 here. Needed around 86-ish to close our trading ghost prints. We have a bearish trade in XLE right now. So again, what do we take away from today's market? There's tremendous indecision, but today we saw a decision to take profits on profitable bullish trades and roll up the puts for bearish trades that are underwater right now. They want exposure to the downside. They're cautious about the upside opportunity, so we're taking something off the table and leaving a runner. That's how we characterize the market today. And to me, that doesn't necessarily bode well in the near term, and we may finally see some real correlated selling where you get everything across the board moving lower. Well, folks, that's what we got for today. We'll wrap it up there. We'll catch you on Monday for the video. You have a great one. Thank you.